Hey everyone, so checking back in on the Canadian MJ space. We'll do the US MJ video tomorrow. It's been an adventure to get this mic wire. Left it in the hotel room, had to get a new one. The adapter didn't fit this current mic, went digging in the car. And when you live out of your car, the benefit is most of the stuff that you own is in your car. So I was able to get some old wires, and I think they should last for now. So we're going to do the Canadian names. There were some nice bounces that initiated Thursday, followed through into this morning. Some names stronger than others. For the most part, these bounces are in downtrends now. So for names like CRON and CGC, we've lost the daily uptrend. These bounces, we're just looking for lower highs. So we have to keep that in mind. There are other names that are still in weekly uptrends that we have a bit more confidence in these bounces in. So we'll look at those two different scenarios, but we'll start it off with CGC here. I'm going to have to keep checking in to make sure my mic is going because I just talked for a half an hour and the mic was not going. Story of my life these days. So I played CRON 2 days ago. We'll go over that in just a second. But the bounce for CGC is still strong. We closed at the high of the day. What is notable is the lack of increasing bull volume. So we're certainly not going to be anticipating any kind of trend changes at this point because anything under 48.60 is a lower high. So what we're looking for is for the bulls to set a lower high on this bounce and top out. And in order to change the trend, we would have to come down and hold 40.56 and then see continuation. That would change the daily trend. If that does not happen, we're still in a daily downtrend. So the lower high is anticipated, but the most important information that we're going to get is what the consolidation looks like. If the consolidation is on increasing bear volume and we give back 80% of the bounce, the odds of a daily trend change are low. If we give back 25% of the bounce on very low bear volume and then see continuation and the S&P 500 shows strength, that's going to be favorable for the bulls. So the S&P 500 closed the second highest close in 2019, so still very favorable for those bulls, and it is an ideal bounce environment. It certainly helped the past 2 days, but again, not changing trends anytime soon, and we lost a key weekly level on CGC. It was the lowest price on CGC that at this point we've seen in the last 2.5 months, and what's notable is we broke that support and then did not see an all-out dump. So when we see a bear break of support without a lot of follow-through, we look for potential flags. So this is a weekly lower high and lower low. So if the daily trend were to change from here with a higher low and higher high, that would be a weekly loss of support with zero follow-through from the bears, which means zoom out to the monthly and look for a bull flag. So the next week of action and how the bulls are able to hold up once the temporary top on this bounce is hit, that's going to be very useful information in terms of gauging whether that monthly chart is a bull flag or not. Regardless of whether it is, we have the equilibrium shaping up with our high, low, lower high, and we're looking for the higher low to form. And if that's it, 40.56, it's certainly going to favor the bulls. If it were to drop down into the 37s, then we'd be right in the middle of the range, and it'd be anybody's game, although it would still favor the bulls, considering the previous action and where we're coming from. But you get my point. The less we pull back, the more favorable for the bulls. So it's going to be interesting. That's what I'm watching. I'm not interested in CGC trading it personally over the next week because I want to see how this plays out. And 2019 has been the year of CRON for me. So that's a point that I made in the video that got deleted or didn't record the audio, was that you want to be comfortable with individual names. The more you watch them and the more comfortable you are with them. I mean, we have traders that just trade Amazon, Google, Tesla, Netflix, 4, 5, 6 names, and they are very comfortable with how they trade, how their options move. And so that has been me with CGC in 2017, 2018, CRON in 2019. And I've talked a little bit how VFF, the bounces are beautiful. I have not found my comfortability with VFF in terms of, what's the right position size and how to enter and exit, scaling in and out, because position size is more of a factor here as the liquidity is a bit lower than it is on CRON and CGC. So I just haven't gotten the feel for VFF that I've wanted, but the more I trade it and the more I watch it, the more comfortable I get. So rather than jumping around to 15 different stocks, if you choose 3 to 5 names and you're comfortable with those names, and then you just move on when the volatility drops off. So VFF's volatility has been on fire, but there's going to come a time when it's not, and then I'll drop VFF, my interest, and I'll find the next volatile name that I want to get to know. So keep in mind that the more you track a name, the more it's going to be an advantage to you in terms of comfortability. So CRON entered that bounce, and I actually entered 2 bounces on Thursday. TRST, which was a failed bounce, and I'll go over that, and CRON, which was a very successful bounce. So the CRON bounce that I was looking for is because the 4-hour RSI and the hourly RSI were both oversold when that bounce got going. So right here you can see, you might look at this and say, no, the 4-hour RSI was not oversold. But remember that the RSI is calculated on the closes of the candlesticks. So when we were down here at 1724, that 4-hour RSI was absolutely down in the 20s. And at that point in time, the hourly RSI was also down in the teens. So hourly and 4-hour RSI being oversold in this sector, absolutely, I'm looking for oversold bounces. So my strategy was also a bit dependent on the S&P 500 because I've been watching this 4-hour equilibrium on the S&P 500 for the last couple of days. And as we were heading down towards support, dumping in SPY very quickly, the 5 and the 15-minute RSI on SPY was very oversold as we're heading to this key 4-hour support. So I said, I bet the bulls are going to at least initially hold this support level. So I'm going to be looking for that bounce in the S&P 500 to correlate with the bounce in CRON after we started this week. As we started the morning with this much weakness. So we dumped down the 5-minute, 15-minute, 30-minute, hourly, 4-hour, everything oversold, which means I'm comfortable to start scaling in. So I entered a first order at 1738 was my fill. And I would have added to that, I would have doubled up down if we broke 17 psychological and then just scaled in. If I'm scaling in, only the hourly RSI is oversold, I'm going to be a lot slower and a lot more cautious, and I'm going to be a bit more aggressive if all these time frames are oversold up to the 4-hour and even up to the daily, which isn't the case in this instance, but in previous instances, that has been the case where I go really aggressive. So as soon as we see the V-shaped bounce and a new high of the day, I say that's it. All right, we know the bottom is in for now, and now the question is how much upside can we see? So I ended up locking in half of my profit under 18 psychological, and again, we're going to go to TRST next because I want to highlight the importance of this strategy of scaling out partial positions because it really keeps you in the driver's seat and it keeps you in control of the trade and it keeps you on offense. And I'll talk about that a little bit with TRST. But here for CRON, exited half under 18, was going to attempt to hold the second half as long as I could. I was hitting the road and I wasn't going to see the rest of the trading day. So 4 or 5 hours flying blind. I could have either set a stop loss at break even. I chose to exit the rest of my position in the 1820 range or so, 1820s. Multiple day maker, lock it in, hit the road, don't worry about anything. So in hindsight, if I put that stop loss at break even, or not break even, but put that stop loss a bit lower, and at that point, we hadn't even established any 5-minute support, so I just had to hit the road, but could have gotten some more out of it had I used a stop loss that was a bit lower, but I was all right with that. So CRON got follow through today, or I should say a lack of follow through today, a double top, and we had a lot of individual names that hit that double top and then just stopped dead in their tracks. So 1928 was the top of this move. If we look at it on the hourly, we hit the low of the dump, the high of the bounce, consolidated in the afternoon, healthy consolidation for a higher low. First thing this morning, we reject. That's your top fishing play as a bear. If you're going bearish, I see 1924, reject the price. Look how fast it happened. First thing this morning, we hit 1924 and instantly a new low of the day. If I go bearish as soon as I can, I put my stop loss above 1928 and then I'm sitting pretty and very comfortable. It's the exact opposite of a bottom fishing play off of support. So there's two things that we get from this. Number one, take profit. If we can't see continuation and break the high of the previous day, that's a clear indication for profit taking and for bears to jump in. So whether you're taking profit and exiting the trade or jumping in bearish or being an advanced trader and doing both, I very rarely, personally, my style, I don't, sell and then instantly flip in the other direction, but that would be a great way to capitalize on, significant volatility and make some big time gains if you were able to do that. But the bottom line is we double topped and then we pulled back and broke the low of the afternoon consolidation. So at this point, that daily chart did not get any follow through. It's a daily inside bar. We didn't even get 2 green days in a row. And even if this inside bar breaks bullish from that double top, we're just going to be looking for a lower high compared to 2110. So we're not anticipating a trend change anytime soon. We'll look for a lower high, higher low, higher high to change the trend. Monthly time frame, we're just looking for a higher low. So if you're looking long-term on CRON, you're going to be watching for a monthly higher low to form and an entry opportunity in these teens. So definitely keeping an eye out for it as the weekly trend has shifted momentum and the daily trend is still bearish at this point. Look at the exponential moving averages, the 12 and 26 period. We had a bear cross and we pulled back, 40%. We had a bull cross and we ran 150%. Now we have a bear cross again. So this could potentially keep us in a consolidation phase for a month or two. We have to be watching one day at a time, but at this point, there is no sign of a daily trend change, so the bears keep complete control at this point, daily inside bar. So for TRST, so the bears are still in complete control. This is an instance where the bulls ran up into earnings, similar to what CRON did. Very surprising that the bulls are, seemingly having so much confidence. And I think now that these two earnings have come out, CRON and TRST, that's going to psychologically affect the entire sector, where we're not going to see as much strength and confidence running up into earnings, and bulls are going to be a bit more timid and potentially look to lock in profit. Keeping in mind that if you've been watching this channel for a long time, you know my feelings on earnings. Earnings, unless you are putting in dozens and dozens and dozens of fundamental research, and you know the sector like the back of your hand, and you know what's going on behind the scenes, you're kidding yourself if you think you have an advantage on earnings. It is literally a 50-50 gamble on whether we're going to go up or down, unless you are putting in time and effort to be ahead of the herd. And if you're not doing that, don't kid yourself and make yourself think that you have an edge, like you know what's going to happen, because so many times, even if we get bullish earnings, we've seen bearish reaction to bullish earnings in other sectors. It's just a complete gamble. If we want to keep an edge in this game and play it long term, we have the odds in our favor on little micro scenarios, and we repeat those scenarios hundreds and thousands of times. And that's how we win over time. If we're putting ourselves in 50-50 scenarios where we have unlimited risk to a certain degree, obviously we're not going to drop 90% on earnings, but we're going to pull back significantly, and your stops are not going to do anything. So if I cannot mitigate my risk and I'm going in on a 50-50, I'm literally just saying, here I am, a leaf in the wind, do with me what you will, and that's having zero control. So I don't play earnings. I will have positions that I hold through earnings, like IAN. I'm not going to sell because I established a position months ago, and it's a small position to mitigate that risk. There's no chance I would ever swing a large position into earnings, into that complete gamble. So there are a lot of people right now who have attempted to play this bounce on TRST and have lost. I'm one of them. I've had some small losses, but I want to talk about my strategy and how I keep those losses small and how I stay extremely comfortable while I'm doing it. And the answer is selling partial positions. So I attempted the initial bounce when I saw the first shift in momentum. We had a little 5-minute volume climax and then a little bounce. So I entered on Thursday, and I was playing CTST, so I don't have the exact numbers in front of me, but I entered on the initial 5-minute bounce, and I took about 15 cents of profit. I'm just going to pull up CTST for now to help my memory, and then we'll switch back to TRST when we do the actual analysis. But for CTST, it was the 5-minute time frame, just looking for the oversold bounce because the sector was bouncing, right? So we know everybody else is bouncing. Obviously, in this instance, the fundamental news of the earnings report led to more extreme conditions. RSI levels can get more extreme when there's news and fundamentals behind it. That was the instance here. So the bounce on CTST on the 5-minute time frame back on Thursday, we had a pre-market support level of 835, and I was looking for that support level to potentially hold, and it did at first, a double bottom, 836, that's where we had our bounce. So I entered, I believe maybe 840 was my entry, and I exited for about a 12-cent gain or so. So let's say 840 to 852, I exit half of my position. What that does is it takes my break-even point for the remainder of my position from 840 down to 828. So we can then drop to a lower low. I have half of my cash from the initial buy ready to go to reload, and my break-even cost is now much lower. So we drop down again and we hit lower lows. I re-enter another half of my position. My cost basis drops way down, and I got it to the point where I was, again, in the red, but extremely comfortable knowing that, number one, I have capital that I can still play with, because the last thing you want to be doing is scaling in, entering, and then entering again, and then entering again, and now you got no cash and you're out of bullets and you're literally against the ropes and the bears are just pounding you in the face and there's nothing that you can do. You have no stop level established because we're falling. You know we're oversold. You don't want to sell, and it's just this terrible scenario to put yourself in. Staying on offense means having capital, keeping cash ready to go, and if that means selling at a loss so you can rebuy lower, I did that all the time in cryptocurrency early 2018 when we were playing these oversold 4-hour bounces. So I would enter, and it was clear that I would enter too early. We'd get a bear flag, and I'd say, yep, this bounce has no bull volume behind it. It looks like we're just setting a lower high, and we're going to drop to lower lows. I'm going to exit my position, and it might be at a loss, But rather than, having to average down and use up all my capital, I have the same capital that I just ate a little loss on, and I can rebuy that lower. So that's what I did in this instance, where I rebought that half lower. I got to the point where I was extremely comfortable. We saw a 5. What I saw was on the ask here. Now you want to be watching the Canadian and US side of a ticker if you're playing it, because there's clues that can be had. And the clue here was on CTST, right around here. The big asks at this point were about 10,000 shares, so $85,000, and instantly just popped out of nowhere on 850, 160,000 shares. So that's literally 16 times what a big position size would be. And that's not someone who's trying to sell 160,000 shares. That's someone who wants to drive the price down. Whether they're short, whether they want to load cheaper, I don't know. I don't care. But what I know is that bulls are not going to be able to get over that wall, and that wall is going to induce selling. So as soon as I saw that wall, I exited my position for a small loss. Let's say my average was, again, I'm doing some rough numbers, but if my average was maybe 850 at that point, then I exited at 847. And I will gladly eat that small loss as opposed to just digging my grave deeper and deeper, just adding and adding on the way down. So I ended yesterday back to all cash on CTST to focus on CRON because I could clearly see CTST doesn't have any bullish momentum. And I exited with less than a 10-cent loss. So when I head into this morning, I'm looking to play this bounce yet again because we know we are due for a bounce and we're going to be looking for a solid, I would say once the bottom of this move is hit, just a solid little 10% move. And that just means, if 750s are low, we're going to be looking for a move back up to 825 just for a lower high. And I don't need to nail that entire move. I don't need to nail the bottom and the top. I can nail the middle of that trade. If it's a 10% bounce, if I get 2, 3, 4, 5%, that's great. It's worth it. So I love oversold bounce plays, as you know. So I'm very comfortable looking at trying to make these plays, but I did the exact same thing today where I had an initial entry and didn't get the follow through that I wanted. So exited right around break even. And then I made one more entry. So I'm in a small position right now in the 780s on CTST. And I will add, because it's a very small position, if we drop lower. So again, it's staying on offense. If you watch fighters or boxers or whatever, it's those that are on offense and those that are aggressive that are in control for the most part. And that's the way that I view it as a trader. I'm being aggressive with taking short-term profit to instantly make me more comfortable in the trade because it's a completely different psychological standpoint. If you enter a trade and you're instantly red versus entering a trade, getting some follow through on a bounce, exiting half of that position, locking in profit, dropping your break-even point down, it's a completely different scenario to be in that trade in that way versus just adding and having no exit plan and just getting deeper and deeper. So I will be interested in CTST on Monday for this bounce to get going. If best case scenario would be for the bulls, let's just use TRST due to volume. Best case scenario is that the bulls hold support of 10.12 and see a break of 10.53. That tells us the bounce is underway, and then I would look to take profit. So I have a small position right now. I will, if we get the bull break tomorrow or Monday morning, I will not add anything, and I will just lock in the profit on that small position. And if we get the bear break, then I will add to it, and I will look for a more significant bounce, but just not having not started yet. So that's my game plan for TRST. And again, position size means everything because it got to the point where my position size was to the size where I didn't even really have to worry about a stop loss or anything because I could see a 40-cent pullback before it would be anywhere meaningful for me in terms of days gain or loser. So let's get back to the major names now. ACB. So we're looking for ACB to form a weekly high or low at this point. And it's fairly similar to OGI. So we're going to look at OGI right after it. But let's just look real quick. Here's ACB on the weekly, trying for a weekly high or low. Here's OGI, trying for a weekly high or low. So when we look at them on the daily time frame, they're also similar as well. And we have just a clear pullback with a little lower high and lower low. But the bulls are, and we're anticipating the bulls are going to form a weekly high or low. And OGI on the daily time frame, little lower high, lower low, not a ton of follow through. So on ACB, what stands out to me right now is a potential inverse head and shoulders pattern. And let's look at it on the 4 hour. So I want to see the time frame that's the most clear. I would be looking for a shoulder. This is the head. And if we cannot break this resistance line of 948 on Monday and we pull back from that, then we're going to have a lower high compared to that level, and we'll need to pull back and form a higher low. So that's the right shoulder potentially forming. We would reject, can't break that resistance, pull back, form the higher low, and then break both of those resistances at the same time. Let's say we top out at 935 and we're looking at 948, and the bulls on the continuation move would want to break both of those levels at once on increasing bull volume. That would tell us our weekly higher low is established and we're heading back to 10 psychological resistance. So again, this is me looking at a pattern and saying this is a setup I've seen plenty of times before. I do not know if it's going to play out on ACB, but this is what I'm watching for. I have no position on ACB and I'm not going to be interested in it unless we get that setup that I want. I want a rejection from 948. I want healthy low volume consolidation for a higher low to form in the upper $8 range at the most. If we were to pull back below 890, then I might not be interested in that play anymore because I want to ensure that we stay close to those two resistance levels so that we can get that follow through. So I am interested in ACB and OGI this coming week for that setup. So let's see OGI, how we're standing here, and it's actually very similar. So 4-hour time frame, there's your left shoulder, there's your head, and if we cannot break 924 and we pull back for a higher low, and we actually might already be doing it depending on how Monday goes, maybe our lower high is 908 and we're looking for that higher low to form in the 880s, 890s, or 880s, but I'm watching for the 4-hour higher low and then break of those resistance levels to indicate that our weekly higher low is established and the bulls are shifting that daily momentum back in their favor. ACB and OGI are the only two names that have this particular setup out of the names that we've just gone through, so I'm putting them in their own category. And if I'm having my pen and paper next to my computer as a trader, I'm going to write down this setup. I'm going to write down those key resistances that I want to see the price reject from. I'm going to then keep track of it, and that's how I'm going to stay organized on plays for next week. For APHA, double top. So this is a clear example of rejecting from resistance first thing, and that being a red flag telling the bulls take profit. We rejected from 940 Thursday pre-market, Thursday the high of the bounce, Friday morning first thing, Friday afternoon. So we have 4 resistances, and at this point it's a bit of an ascending triangle with a clear resistance line and then higher lows as we approach it. If we can hold 905 and then break 940, then we're going to get that bounce follow through. But if we lose the support levels without breaking 940, that's obviously a red flag. Even if we break 940, anything under 983 is just a daily lower high. And we're going to have to see the bulls probably set a lower high, higher low, higher high if we're going to shift this momentum, because the momentum is favoring the bears on this daily chart at this point. TLRY, also a clear bear break on the daily. Well, not a bear break, but just a lack of any bull follow through. Still very weak. Anything under 71.25, I'm going to call a lower high. And I would normally say 75.55, but we have a double top at 71.25. So that's the level I'm looking at. And we're looking for just a daily lower high compared to that level. Support is 64.96 and 62.65. And we're a ways away from changing any trend on the daily time frame for these bulls. Hexo. So I'm interested in Hexo because it's a 4-hour equilibrium. Just a nice tight range worth watching. Low the pullback, high the bounce, higher low. Anything under 922 to start next week, we're going to look to pull back and form a higher low compared to 835, and just a tight pattern to continue to watch. And I would only be interested in this pattern, again, on my piece of paper. I'm going to write down 4-hour equilibrium on Hexo, and that tells me I want it to continue to tighten. So I'm only going to play this 4-hour equilibrium if we reject from 922, we pull back and form a higher low compared to 835, and then get a bull break. And for that to play out, it's going to be at least Tuesday or Wednesday for that to happen. So I know there's no rush for an entry, and this is one to keep an eye on to see if it gives me the setup that I want, to see if the setup that I want comes to me and the trade presents itself and says, here I am, this is what you were looking for, come get it. Because if it doesn't, I'm not going to play it. I'm just going to skip it and go on to find the next setup. VFF. So we knew to be looking for a bounce on VFF because we had pulled back 30% plus in 4 days. That's extremely significant, but we also knew that on the bounce, because we just lost the daily uptrend and we pulled back so significantly, we're just looking for a lower high to form. So here's an instance where I obviously wish that I chose CRON and VFF as my bounce plays on Thursday, but again, it's just the comfortability, and I haven't gotten over that just yet because the bid and the ask spread on the US side are not what I would like, and to try and enter, the size of a position that I would enter on CRON, it's difficult for me to do on VFF on the US side of things these days. So we got the nice bounce follow through. It was a huge move, 20% on that bounce, but that was our red flag. So we know we're looking for a daily lower high. So again, what I've talked about in previous videos, where we zoom out to the longer term time frame and we determine what is the most likely scenario. So we can say that is the most likely scenario that we are going to see a daily lower high form on this bounce. So if we've just bounced 20% in 2 days, and actually really just 1 day and 30 minutes of trading, 10 minutes of trading, so pretty much 1 day, we've seen a 20% bounce. And that tells me, here's in the chat room this morning, first thing, where I say VFF 20% bounce from low and just looking for a daily lower high, bears keeping an eye on it, which means look for a bearish entry. And it also means take your profit. We just bounced 20%. Do not be greedy. And we're going to look for weakness. So that weakness did come this morning right out of the gate, where we set our top at the high of the day and then just pulled back from there. It was a huge green candlestick first thing. Very overextended, and then it was just a slow fade where every single candlestick on the 5-minute time frame was a lower high from there for the next 40 minutes or so. So if we want to see where the clear signal was, it's on the short-term time frames, because this was a fast mover. And if we were going to be really sure that our high of the day is set and the bulls aren't going to get any more follow through, it would really be all the way down here, and we'd be at that support of 1965, because we saw that clear support established and a clear bounce attempt, held support, tight, bear break. As soon as 1965 breaks, I say, all right, bulls lost all their mojo. Let's say you go bear at 1965. Next thing you know, we're down 5% in less than an hour. That's a big gain for a bear. Also, reverse side, if you see 1965 break and you exit your bounce position, you just saved yourself 5% of that pullback by locking in that profit. So again, knowing that a daily lower high is very likely to happen sets up the game plan. It's the scaffolding of your trade game plan that you then need to just work the details out around. So for the 4-hour time frame on VFF, I'm still going to be interested in it this coming week, because we're looking for a 4-hour higher low to form compared to 1676. And depending on the size of the pullback, it's going to determine whether we can see a higher low in continuation, or whether we're going to see a 4-hour equilibrium form Monday and Tuesday of next week. I would assume it'll be an equilibrium, but that's an assumption, and we'll take it 1 day at a time. And I don't need to do assuming, because I can just wait and get more information Monday morning in the first hour of trading. So always interested in VFF due to that volatility. TGOD. So TGOD, actually, I hadn't looked at TGOD close, but that's the same as OGI and ACB. Same pattern. 4-hour time frame, left shoulder, not as clear. There's your head. And if we can't break 508, that's our right neckline. And then we would look for the higher low on the 4-hour time frame to be that right shoulder. So if we can't break 508 on Monday and we pull back into the 470s, 460s, it's going to be the same potential setup. And we're looking for the weekly higher low to form and the daily time frame, very similar to those other names. So I personally won't be playing TGOD because of volume and liquidity, and I'd rather play those other names, but it's a very similar setup. And we're going to be comparing the 3 of those in their own little grouping, and we're going to be watching to see out of those 3, who's the more bullish setup, who's the more bearish setup, who's going to have more likely follow through for a bull break, and things like that. So all 3 of them in the same category, and it's all about 508 resistance for TGOD. And if we reject, then we look for the 4-hour higher low. Where am I? Fire. I was going to cover N, and in the other video that the mic didn't work, I did cover N, and then I said I'm not covering N anymore. It's a penny stock. It's junk. It's all bear. I mean, I don't know anything about the fundamentals. I know they got drama, but it's in a clear downtrend. There is no sign of the bulls. There is a lack of clear support nearby. After 62 cents, we're looking down towards 30 cents, and I just have no interest in it. There's so many other opportunities out there that I'm not going to waste time covering N anymore. So sorry, N, but you get the boot. Fire on the daily time frame, 236 was key resistance, and we were rejected by 3 pennies. That's a double top, and now we're pulling back fairly significantly. If we break 213 and 208 next week, we have a clear weekly equilibrium forming, where we have our high, low, double top essentially, and we're going to look for a higher low compared to 177 if those supports levels break. 213 and 208 are the most important support levels. So hold on to those levels and the bulls are just fine. And we're going to be looking for this break of 236 and 243 to be very notable. But if we cannot hold those support levels, equilibrium on the weekly, and that could potentially play out into the summer, depending on how much pullback we do get. So the fire bulls really want to defend that support Monday, Tuesday. CXXI, nice continuation. I've talked a little bit about the cautionary tone of the pump and dump here on CXXI, but price action is king. And the only truth in the stock market is what the current price is. And it's just fine at this point. So it's something to be aware of and be cautious of. But in as long as you're being protective, if you're playing this name, it's just fine. We have a daily higher low at 205, and we just saw continuation to higher highs. So that break of 243 was a great sign. 244, it was a double top. And we're now just looking at an hourly uptrend. Hourly support is 240 and then down to 230. And resistance is 252 and then a lack of resistance after that. 252 and then 276. So again, we need to be cautious for certain reasons, specifically Twitter and their pumping. We know what game they're playing, but it's working. So that's all that matters at this point. PYX, very key support is approaching. We held 23.55. The more extended you are running into a resistance, the more confident we are in a rejection. So that's an example for for FIRE. We were very extended after 5 weeks in a row of upside, running into a resistance. The odds increase in a rejection because of how extended we are. Likewise to the downside, PYX, you have 4-hour and hourly RSI oversold. When you're approaching a very key support level, we held it by 11 cents and then saw a solid little bounce. That being said, it was a very short-term bounce that's a potential bear flag as we're right down to testing the support again, but that's just an important note and a little bit of a rule of thumb to have. The more extended you are, that's why we use RSI levels in conjunction with support and resistances, because it tells us how out of breath, how overextended one side is when it's heading to a key level. So if PYX can hold 23.55 this coming week, certainly be interested in that bottom fishing play. But if that level breaks, it's a notable break and a loss of weekly support. I'll still be interested in a bounce though, because the 4-hour RSI is going to be right back to oversold if we break. The hourly RSI will be right back to oversold if it breaks. And the daily RSI, not quite oversold, but bottom line is there's a decent bounce approaching in my opinion, but how we react to this 23.55 level is going to determine things, because if it breaks, that means take a big step back, be very patient, and let's see how overextended these RSI levels can get due to the lack of support established in the low 20 area. NRTH, really nice daily equilibrium to be watching. This is another one to write down on your list. High, low, lower high. Higher low is 127. Anything under 154, first couple days this week, is a lower high. Ideal scenario would be to reject from 154, hold 127, and then a bull break. The tighter you get, the more follow through you get. We have a volume, very clear low volume pattern here, and we would want to see that volume break on the equilibrium breaking and just patiently waiting for that to tighten up into the middle of the week, perhaps the end of the week. So last we'll do RIV. RIV, this is a very clear signal to exit bull positions and enter bear positions. When you have 3 supports at 430 and 432, and the next support level after that is 405, a 5% drop, that's your bear signal. We broke support by 5 cents, formed an inside bar, and then broke that. So multiple signals, multiple days in a row, and then we just all out dumped and closed at the low here on Friday. So at this point, from that 430 signal, very clear signal of support being lost, we have pulled back. And looks like my measurement tool is not here, but it's a significant amount, well over 10%. So I'm interested in an oversold bounce play, but this is one you want to be very cautious on after such a clear break. It's such a clear signal for bulls to exit and for bears to jump in that we're now looking down at a gap at 340 as the next level. So yes, we're extremely extended. The 4-hour RSI is in the teens. The hourly RSI is getting back to oversold. The daily RSI is oversold. So if we see a gap down open on Monday, it's worth watching for the potential of a bounce play. But again, only if you're comfortable with playing oversold bounce plays, because it is tricky, as TRST is showing us. So to wrap it up, we got the USMJ names tomorrow. Heading into the next week, my main plays are I'm watching CGC. I'm not going to trade it, but I'm watching for the sector's sake as to how we're going to follow through. What kind of consolidation are we going to see? Increasing bear volume that gives back 80% of the move, decreasing bear volume that gives back 20% of the move. That's going to tell me a completely different story based on what the consolidation looks like as to what the odds are that the bulls can change that trend. I'm going to be looking for playing ACB, OGI, and TGOD. I'll be playing ACB out of those three due to volume and liquidity, but I'm watching that 4-hour potential inverse head and shoulders setup. I'm still interested in TRST because I do believe a 10% bounce will occur once we find our bottom. We just haven't found that bottom just yet. I'm interested in Hexo for the 4-hour equilibrium, but that's not going to play out until Wednesday perhaps. VFF, we're watching for a 4-hour high or low. There's all kinds of setups depending on what you like to play, and we'll leave it at that. Just spent the last couple days at the launch of the futures for trucking industry, the first ever futures, $1 trillion industry, and one of our former members started a company that's very quickly approaching $1 billion company, and I have no doubt that it'll get there eventually. But it was a cool experience to see the launch of these futures, which I anticipate to be a very big trading instrument in the future. But fun experience, and we'll do Adventure Time. See you soon. So Adventure Time, we've got Natural Bridges National Monument now. Pretty similar to Arches, but just a little bit different. And there's a nice little valley with trails and paths to walk through. So another very picturesque spot with some very cool rock formations. And I actually ended up getting lost for the first time. I never really got lost. Definitely went the wrong way and had to backtrack sometimes, but I got lost, completely lost the trail here. And it was, well, these bugs are really cool. They're pretty much a mix between a giant moth and a hummingbird. And I couldn't figure out, is that a hummingbird or what is going on there? And I forget their specific name, but it is something that alludes to their similarity. But they were having a blast on these yellow flowers, getting their pollen and nectar. But ended up getting lost on this trail and stuck in a valley, essentially, in a canyon. So I had to scale the walls of the canyon to just get to the top and to be able to see things. And then ended up, by the time I had to go 6 miles out of the way and it was dusk, it wasn't the kind of thing where I was, fearing for my life. I pretty much knew worst case scenario, I'm going to be hungry and I'm going to have to sleep exposed out, in the open and deal with it tomorrow. But fortunately found my way out and ended my way back to the tent, exhausted, pretty much hiked twice as long as I was anticipating, but it was a good learning experience. So a really nice canyon walk, natural bridge. You can see where the name comes from. This is in Utah as well, Gooseneck State Park. Incredible river that, obviously has cut this path and just winds back and forth. And to just see time eroded like this, very cool. Another place where you want to time it right, because I got there too early and was dripping sweat, completely exposed, waiting for dusk. But another spot where you just put your tent right there. There's nobody else around. Maybe there was one other RV that was sitting up there. Not a ton to do, but if you can keep yourself entertained with a book or with some music or with some ganja, it's a pretty good spot. But a really interesting geological formation. That's how I entertain myself. A little bit of modern art, leaving my mark. And that's that. So, after Capitol Reef was heading down, where did we go next? I think we're coming close to the end of this trip. And then we'll see what am I going to talk about at the end of videos. We'll find something. So have a good Friday night. We'll be back tomorrow with USMJ eventually. Going to go to Smoky Mountain National Park again on the way home, which is actually where this road trip, Chapter 1, started. So all full circle. See you then.